Welcome to Digital Finance Today podcast series. This is the second episode and we are going to discuss about how to raise capital through online platforms for exporting companies. The Digital Finance Today podcast series is about finding the trends in the digitalizing financial markets, and in each episode we will have a guest speaker who will give insights of the market. My name is Mari Tomunen. I'm the head of business development of Grow VC Group. Grow VC Group is a digital finance enabler, and at the moment our group includes 10 businesses on 6 continents, and we are growing all the time. Today I'm here with my guest Kati Suominen, who is the CEO of TradeUp. Kati, why don't you introduce yourself and tell us what is TradeUp?
Thanks very much, Mari. It's great to be here, and thanks for hosting this. We've started TradeUp about a year and a half ago to enable export-driven globalizing companies access growth capital. So TradeUp is an equity crowdfunding platform. That's how it started out. Now it's a broader digital finance platform for globalizing export-driven companies, primarily in the United States, but we're also growing further internationally, and the core product and core mission is to provide growth capital, equity, longer-term debt for companies that are already exporting, already doing global business, already selling to international clients, but that need now the Series A or the early stage funding to take their business to the next level, to scale and diversify in international markets as well as domestically. So that's what we're focused on.
Yeah, and this is actually a special day for TradeUp, isn't it? You were awarded the runner-up prize for Best Global Digital Innovator. That's amazing. Congratulations.
Yeah, well, thank you. This is an award by the London-based Trade Finance Global, and they have an annual award, and we came second in the category of best digital finance platform in the trade finance space. So I guess they were impressed by kind of us putting 2 and 2 together, namely that now companies are able to raise capital online from accredited investors, raise kind of serious equity as well as debt through online platforms, and then the need for export-driven companies to have further access to capital or further sources of capital available for them. As we know, exporters and companies engaged in trade have for decades, if not centuries, had different kinds of financial products supporting them, such as accounts receivable finance, purchase order finance, when they receive a big international purchase order, and how do they go about fulfilling that, different trade credit insurance products, letters of credit, of course, and so forth. And there are a number of providers for these products, and how we're different is that we are more than anything focused on the growth capital side. How do we actually help these companies that are doing day-to-day these kinds of export transactions to take their game to the next level, so to speak. So I guess that's what was intriguing to the panel who was looking at the companies that they were evaluating, and we're very honored, of course, and very pleased, very humbled by it, and hope to, of course, take ourselves to the next level, if you will, because we're very new as well.
And before we go deeper into raising capital and talking more about exporting companies, I know, Kati, that you are today in Washington, D.C., and you organized an event there. Can you tell us more about that?
Yeah, I've had a history of working here in Washington, and I worked in the trade policy circles, if you will, at the Inter-American Development Bank and a number of think tanks in Washington, and always kind of looking at international trade policy developments, as well as helping governments, particularly government clients, access capital, millions of dollars to make their economies more competitive and more trade friendly. Trade, as we know, is a great tool for development, and much of my career so far has been about that. It's really helping governments and now companies access the knowledge as well as the capital in order for them to export. And in the context of that, we had an event here in Washington with the Council on Foreign Relations, which is kind of a prestigious US think tank. I'm a member of that. And the speaker was the head of the Small Business Administration of the United States. Her title is the administrator of the SBA, Maria Contreras Suite. And I had the honor of preparing a background paper for this event. And her remarks focused very much on how the SBA and other partners, private sector players, as well as other government entities can better support entrepreneurship, small business competitiveness, as well as small business exports in the US economy. So it's really a wonderful way for us to be involved in these broader debates where all countries around the world are looking for sources of growth, and exports, particularly coming from small businesses and kind of mid-sized businesses, is seen as the one of the leading ways in which countries can generate growth. So it was very nice to be part of this and get to know the administrator and be part of kind of furthering this debate a little bit.
Let's talk a bit about your company, TradeUp. You focus on globalizing companies. Why is that?
Yeah, well, that's a good question, and of course, intuitively it kind of appeals to people that, hey, if there's an internationalizing company, they must be kind of growing and globalizing, and there must be something kind of exciting about them. But we actually have a very robust investment thesis, if you will, behind TradeUp, and that is that when you look at academic research, numerous papers produced by scholars in different parts of the world, in Asia, in Europe, in the United States, looking at exporters versus non-exporters. These studies practically unfailingly find that exporters outperform the non-exporters. Exporters are better companies. They outperform the broader market. They are essentially kind of like an asset class of their own. And when you look at metrics like productivity, wages, the skill levels in firm, the employee skill levels, growth, stability, will the business go out of business or not? These metrics are always better, practically always better for exporters when you compare to non-exporters. So we have decided to kind of focus on this particular segment because we feel that it's a very robust, makes for a very robust investment thesis. Now, of course, if you're a sophisticated investor, you want to say, hey, well, wait a minute, you will want to take a deeper look at these exporters. It's not only that company exports or engages in international trade that makes them better, or that makes them a worthy investment target, that you may want to look at these companies more deeply and find the best exporters in the mix of exporters. And so we certainly have that and have a due diligence process in place where we would vet companies across the typical criteria that an investor would vet them, such as the quality of the management team, the financials, how clean the financials are for the company, what are the growth prospects. We look at, with a partner of ours, we look at the legal, basically a legal due diligence where the company has been incorporated and so forth. So we do take companies through a pretty rigorous process, and some will drop out in the mix. But overall, if you put those two together, you focus on the outperforming globalizing companies, and you vet them hard and look which are the best ones. That's kind of our focus, on the entire business model turns on that.
So how do you find companies, and how can companies find you?
Yeah, isn't a $1 trillion question. I find that a lot of entities, whether it's banks or governments or funds or consultancies, they always have trouble finding the companies and knocking on kind of the small businesses' doors and finding the exporter. It's actually interesting that in the trade space, there are a number of entities that day in, day out work with globalizing companies, exporters. Some entities involve US government agencies like the Export-Import Bank. Companies go there all the time to get financing. And so this is a wonderful source for us also when a company requires something extra that the Exim cannot provide, and where we might be able to come in. So we work with selected Exim staff on the ground as well as SBA staff. There are similar entities at the state and local level where we can work with. For instance, in Los Angeles, there is a person at the mayor's office who works with exporters and so on. So there are a number of consultancies, government entities, both at the federal and state level, university centers that focus on globalizing companies, providing them with advice, sometimes kind of surrounding them with students, MBA teams, and so forth. And so there's what we like to call unique touch points to these globalizing companies, and it's actually you kind of have to know the space in order to find those touch points. But that's something that is in our comparative advantage, given that in our team and in our board we have very deep capabilities on the export front.
Okay, and let's go back for a while to raising money for exporting companies and talk about investors. How can investors work with you?
Yeah, that's a great question. Investors oftentimes have so much deal flow, if you will, coming in that it sometimes is overwhelming. But in our case, we make every effort to go and speak with investors and be in front of them and show them the opportunities that we have vetted and done due diligence on, so that investors see these opportunities, also understand the value of these exporting companies, and understand the matrix that we use to analyze these companies, and understand our due diligence process. So we're really is a constant kind of outreach and education effort with investors. But any investor can readily come to us. They can sign up on our site, log in there. They have to prove that they are accredited, whether they are an individual or a fund or an institutional investor like venture capital fund or private equity fund, family office, and so forth. So they can immediately go to our site and sign up and start seeing the kinds of opportunities that we have, because that by virtue of signing up, they can see the paperwork that the companies have submitted, PowerPoints and other materials. And certainly we would welcome any investor to speak with us as well directly. So they could just email us, any of us, and we can go from there. And we're bit by bit building these relationships with investors in key sectors to be able to provide them with the deal flow that they are looking for. And just this hasn't come up yet, so I'll mention that the typical opportunity that we are looking at is not necessarily kind of always an angel opportunity. In fact, there are a lot of platforms that work with angel investors and smaller deals below $1 million. Our typical raise, as we ratchet up and service companies, starts from about $3-4 million, goes up to 10. We are right now having in the system a company that could raise 35 million, another one that is coming that could raise 22 million. So these are not necessarily like tiny raises, but this digital platform enables raises of all kinds, certainly, and we feel that the greatest kind of the best investment targets are these kinds of companies that already have revenue, are already out there selling, and that now have been, are proven, but now need that extra growth capital to take their game, to really ramp up their game. So that's how, that's what investors get from us. It's very rigorous due diligence. It's access to these kinds of globalizing companies that are scaling and diversifying internationally. It's companies that are proven, that have very solid management teams, already proven financials, proven business models, and that are scaling further. And investors can reach us, by emailing us, by signing up on our site, by calling us, any which way. And they can readily see companies also on our platform, TradeUpFund.com.
How long does it take to raise money?
Yeah, that's a golden question, isn't it? when crowdfunding kind of first started, and we've of course gone beyond that because we ourselves now provide also export working capital and international project finance that go beyond kind of these equity raises. So we're more of a digital financing platform. But when these kind of online capital raises started, a lot of companies came to us and came to other platforms saying that, you know, once I'm on the platform, doesn't the money just come? Like when is the money hitting my bank account? And this is not, of course, this is not the reality. When a company puts their profile on a website, that's just the first step, really, in the process. It's just the first tiny step toward raising capital. There's a whole lot of work that has to go into it. If it's a platform that doesn't have a broker dealer element to it, then the company typically does a great deal with the platform or and by themselves of PR and marketing of the company itself, gets on TV, creates buzz around the company. So there's a lot of actual hard marketing dollars that should be going behind these raises. It really takes, oftentimes we see raises take easily 6 months. Sometimes can be faster. Sometimes we have entrepreneurs that have already kind of the lead investor in place and so forth, and have contacts. And in those cases, it goes fast because they have done a lot of preliminary work. And when you have a lead investor, i.e., somebody has invested, say, 300,000 or 400,000 toward your $1 million raise, say, just as an example, then it's comforting for the other investors to come in because they feel like somebody has already, thought that you are worthy of an investment, and there's already money being put in. So, investors like to kind of follow each other a little bit. So there's that element that helps companies. What helps is what I said before, is this kind of marketing and PR, like, particularly if you're in consumer products, or even in some kind of B2B industries, it's good to have a dedicated kind of marketing PR person who handles your social media, gets you in the right news media, just creates buzz around the company, and you might be able to get some wealthy accredited investors that way, and certainly impress the investors that are there. And then, the third element is clearly is just really being persistent. It's oftentimes in this, it's, you may talk to, as in the offline world, in the online world, you may come across 200 investors before that 201st person says yes, and you have to take a lot of no, and you just have to believe that it will happen one way or the other. And I've been actually extremely impressed and invigorated, shall we say, by the patience and perseverance of entrepreneurs that have come to us and that are working on this. But it can definitely be done, and it's done every day, but it does take more work than a lot of people realize. So there is a lot of dedicated effort going into it. Even if you work with the platform, you really have to be working hard to get the investment in.
Let's talk a little bit about the current situation in the global market. What do you say? Is now a good time to start exporting, and how are the exporting companies doing right now?
Oh, that's a great question. Yeah, I guess depends a little bit what country you're in. But if let's say you're in the United States, there are some headwinds in the sense that China is cooling a little bit. Europe is still not growing that much, and the dollar is also quite strong right now, so that kind of hampers your competitiveness when you're selling to international markets. At the same time, there are structural changes in the world economy, the rise of middle classes in the emerging world, the rise of infrastructure spending that stimulates growth of other industries as well as services in which the U.S. economy is extremely competitive. The improved opportunities to use kind of to engage in services trade, for instance, through software service and other online offerings and services. It's easier than ever to export and engage in trade by using e-commerce, where once you're on a platform like eBay, you're visible to the entire world, and typically companies that are selling on eBay become exporters accidentally because they have been sitting there on the site and somebody discovers them from Korea or France and wants their product, and lo and behold, the company becomes an exporter. And on average, every eBay seller that is selling from the United States exports to 19 markets, and 95% of the eBay sellers export. So there's a technology really gives small companies, the visibility that they never had. And there are these big structural changes in the world economy that do favor engaging in global markets. And I would highlight another point about particularly American products and companies is that we have truly highly competitive, highly desired products and services in the United States. When we go to international markets, the quality of our workmanship is really highly valued. So we're competitive, and even if currency happens to be strong at some point, the quality of our products still goes a long way out there. So I don't think it's there are a lot of cyclical issues that might make one say that, hey, maybe not now is not the right time. But to me, it's almost like it has never been such a great time to go out there when you look at kind of the bigger picture and bigger wheel of history.
Tell us, Kati, when you help companies to raise capital, can you also help them to go global and help them in other ways, in addition to helping them raise capital?
Yeah, that's a really neat question, because we started out with just focusing on the capital raise and focusing on kind of being a growth capital provider for globalizing companies. And then what happened is we started to hear from companies that, hey, I also need purchase order finance. I got this big order from a big multinational buyer, and I don't know how to fulfill this order. I need millions of dollars just to fulfill this order, buy the supplies and the raw materials and the labor in order to produce the products that this order was all about. So we said, well, let's partner up with purchase order finance providers, export working capital providers to also furnish that. And then we started to see some international projects, wind project in the Caribbean and clean tech project in Africa, and you name it. And so then we partnered with a project finance provider to help companies also access that. And oftentimes those kinds of project finances pair up with exporting. So we have a more holistic set of financial products, if you will. But the latest wave has certainly been companies that have been a little bit what I just described. Some have been very deliberate about their export journey and targeting specific markets and going about it in a very systematic, methodical way, expanding and scaling, diversifying internationally. Others have been online. They have an attractive product, and foreign buyers have just found them. So I talked with a lady just then who is manufacturing in China, imports to the United States, but also her products have been discovered online by buyers from all around the world. And she's now exporting to 11 markets from the United States just because she happened to be online and be discovered, and she never intended this to happen. But she's, of course, delighted by the outcome.
And lastly, I know I want to know, but I think also our listeners want to hear your thoughts about the market trends. What kind of trends can you see in the global market when it comes to raising money through online platforms, and also what trends can you see in exporting companies raising capital?
Yeah, these are great questions. And what's interesting about the alternative finance, if you will, or digital finance world and so forth, it's changing so very rapidly every day. There's something new, and to me, there's just a tremendous amount of different kinds of windows that companies can now leverage and use to raise capital. There are different business models, different sectoral platforms, for medical technology or for agricultural projects or you name it. And then platforms also have very different business models, how they monetize, how they engage with the companies. and so forth. So there's such an enormous amount of diversity and color there. So companies do need to do some of their homework before engaging. But to me, there's never been as much kind of opportunity to raise capital um, as there is today by virtue of the rise of online financing. And I like to say that there also has never been such a good time to engage in the global economy in light of the fact that so many countries are becoming more and more developed, middle classes are growing, and we have all these new technologies, or new-ish, if you will, like e-commerce, that enable companies to reach international markets with very low cost. Overall, there's an array of banks of trade finance providers that are, of course, very bullish about the international markets in light of the projections that trade is going to be growing quite rapidly in the next years. And there are, of course, there are also gaps in the market. Like some projections say that supply chain finance, for instance, could use 1.5 trillion dollars additional capacity to accommodate all the demand that's out there. So I would imagine that in the export space, there's going to be more innovation, and in the trade finance space per se, to mend these gaps. But overall, I think both markets are kind of the online lending and online capital raising market, as well as the trade finance market, export finance market, are quite robust and quite on fire, in fact, and transforming and changing as the digital finance world transforms and changes.
Interesting. Thank you, Katie, a lot for sharing your thoughts and all this information. It was great to have you as our guest.
Thank you so much. It was my pleasure, and thank you for having us in your program, and look forward to continuing our collaboration.
Thank you. I'm sure the discussion will continue, and we invite all our listeners to send us feedback through our website growvc.com. You will find there our podcast site. You will find also a contact form. And you can propose guests you would like to hear being interviewed and topics as well. We have exciting plans for the next episodes, but all tips and wishes are welcomed. Thank you all again for listening Digital Finance Today. We will be back in 2 weeks with new interesting insights from financial markets. Stay tuned.